Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 21st, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. The previous session, we have our FOMC key level come into play here. 44.9875 is the FOMC key level for the ES. You can see nearly an outside day. Price coming up just shy of the previous session's high and then dropping through the previous lows to close way lower on the day. Now this breakdown could open up a continuation here into the previous month's low ahead. That's going to be around 43.50. You see the break here occurred right at the previous month's midpoint, and that heavy drop here opens the door to the previous month's low up ahead. Keep in mind here, early today, if there's a strong rejection that develops early today on the lows, especially say with pre-market data points coming up here soon, we could be looking at maybe a tail event that could turn things a little bit higher off of these lows. But overall, the flow is to the downside here, and any pullback could still be a selling opportunity until we go reach the previous month's low price. So again, still flowing to the downside here until proven otherwise. If we take a look here at the NQ, you'll see right here, big time drop as well, near outside day down, very similar looking to the ES here, coming right up to the previous highs and dropping hard. The FOMC coming in at 15,369 half. The FOMC levels are posted in the description below. This sell-off here away from this level opens up more weakness to the previous month's low. Once we do see a move in that direction, especially since these levels have gone offered, you likely see a continuation until you see a strong low. Once you see a strong low, there's a tendency to snap back to these levels down the road. So again, could be 1, 2, 3 weeks down, followed by a reversal and a snap back to these levels 1, 2, 3 weeks later. So again, watching to see how it plays out, but the fact that we have broken down through the previous month's midpoint opens the door to the previous month's low. That's 14,600. All right, let's take a look here at crude. Crude down about 0.25% right now. You'll see the pullback here in the previous session got some initial legs, but really couldn't get going here post FOMC. Once the FOMC level came out, prices dropped into the close. Now we're seeing a bit of a developing thrust reversal signal here inside the bullish Pima trigger zone. Again, this could offer an opportunity to buy this thing into the next resistance above 94. Once we do reach 94, again, there could be a reaction that happens here that takes us back down, perhaps as deep as 84. Right now, 84 to 94. That's the next 10 handle distribution above. Going this far across the range here and pulling back could provide that last amount of energy needed to go get that previous high. Once we do get the high, again, we could see a rejection back down. Any kind of strong push through that level, something like what we've seen through 84s back here, that opens up 102 to 90 to 104 up ahead. So 94s up to 102 to 104 up above if it can push through that 94. Right now, 94, too strong a resistance perhaps to deal with, so the first idea would be a fade back down. So looking for this thing to push up here in the near term. Keeping an eye here on gold. Gold right now down 1.5%. The previous session with a big push to the upside here, and then it found a follow-up rejection here at the previous month's close. When we started to move up here, we mentioned that 1968 to 1970 could be in play. That's a retest of the previous month's close. It went offered here, bounced back. The retest also offered, and now we're dropping back down. This market has coiled up so much that very soon, and perhaps even today, we're going to see expansion. You see the 1950 level. If I bring it across this way, you can see these lower highs. You see those higher lows. Is price about to move away from this level? At the moment, it is making a move away from 1950. It is taking it offered. The retest also offered here, and you're seeing this thing drop hard. This could be the initial point here where we finally start to see some movement out of this apex of this converging range, and if we see expansion, it could be big. This range has been coiling for multiple months, 1, 2, 3, 4+ months, and that energy could easily drop this thing back toward 1830 down below. All right, lastly, taking a look here at the YM. The YM down about 0.6%. Big time outside day reversal in the previous session, or rather failed new high with potential for an outside but didn't quite get there. It did close through the previous mid. This provided an opportunity for any pullback to be an opportunity to sell back toward 34.4. Now, no real pullback has been seen. It just kind of bumped and dropped right away. We're still looking for this continuation, likely to take us back to these lows here. That's about 34.400 to 34.350. And then you have a shot to go grab the recent lows below that. So overall, we have these previous month's lows right here coming into play. Previous month's low is 34.062. So we're looking at a potential drop into 34K down here up ahead, given this big rejection, and the failure at the key range high, and now at the midpoint of the pattern. Again, opens up 34.062 down below. So still working lower here at the moment. Nice compression overall. Failed new high. Strong trap above the key range high. Everything's still flowing to the downside until proven otherwise. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.